One perhaps less obvious effect of success in that domain space would be on the risk parameter would be that startups in the InsurTech space would be able to get far further along while raising a fraction of the capital that they have essentially been forced to raise to meet things like reg cap requirements and to set up these entities. And so one of the things one might observe about where we're at in the InsurTech 1.0 to 2.0 transition is that many of the 1.0 companies raised too much capital.
Yeah.
Pushing up valuations to then find themselves behind the eight ball because of that. And again, it's a thing that we can tell that story in two ways. We can look at it and say, look at this, irresponsible capital raising from, such and such a company with such and such a DNA to it. Or we can tell that story in a slightly different way, which is in InsurTech 1.0, the only way to build a company and to give it an opportunity to get to scale and escape velocity meant raising hundreds and hundreds of millions of dollars. Yeah. But in the future, a company may be able to demonstrate innovation with $10 million because the rules of the game have been changed between then and now. And those changes would be indicative of a leap forward in AI, leading to a leap forward in risk prediction precision, leading to a change in reg cap requirements, leading to a different sort of capacity needed for an upstart idea. And that would be a wonderful, currently unanticipated consequence of, the maturity of the industry tied together with this other macro change that, is definitely happening. And so it just becomes a question of do all those ingredients, come together in just that sort of way or not? This is Fro from Beam Benefits, and this is the future of insurance.